History is unfolding in front of our eyes. Gold is telling you everything you need to know as it's up 37% year to date, crushing this year's stock market returns by nearly 4x. We got some new data today showing that there are now more Americans out of work than there are jobs open, and government bonds are doing something that they only do when something big is about to happen. Stick with us today and get ready for a crazy stock market. To start off, Tom will not be with us today. He has some personal things that he's taking care of, but we do have a great video and we're getting right to it. This gold uptrend has been truly historic, and it has basically just been a money train in multiple different senses. And we can see that this uptrend basically is extremely strong. The gold 50-day moving average has been above the 200-day moving average for 440 trading days now, which makes this the sixth longest streak in the past 50 years. And again, not only is this streak still active, but it's accelerating. And a lot of people are kind of wondering, why is gold ripping up in such a violent way right now? And the US dollar to gold ratio perfectly explains why this is happening. Because not only are traders buying up gold, but basically everyone around the world who owns US dollars are at least considering it. Basically, the US dollar to gold ratio is falling off a cliff because investors are losing confidence in the US's ability to preserve the dollar's value. Basically, we're running trillion-dollar deficits every year, we're printing money unsustainably, and inflation still isn't under control. So, what we're seeing right now is a worldwide shift where investors and countries are saying, screw it, I'm just going to buy gold instead. And even though it doesn't pay a yield like US Treasuries do, it's not going to get inflated to high hell. So basically, gold is becoming the global safe haven asset. And this has been something that has been kind of happening under the radar, especially over the past few years. We can see when we look at international reserves, gold is becoming not only a larger percentage of, countries' reserves, but it's increasing and changing in a pretty quick way, especially over these past few years. And basically what this is making for, and why this is such a big deal right now, is because investors are selling out hard of long-term bonds. We can see that the yield spread between the 2-year Treasury yield and the 30-year Treasury yield has steepened to its widest point in several years. And the last two times it has gotten this extreme, it coincided with two of the worst bear markets that we've seen over the past 25 years. Basically what we're seeing right here on this blue line is the difference between the 2-year Treasury yield and the 30-year Treasury yield. In the past, when we have seen this dip negative, as we can see, when we see that this line goes below zero and then shoots back up, we have seen some major problems in the past because this really shouldn't be happening. When we have seen situations like this, again, it has preceded the dot-com bubble crash and the Great Recession. And we're seeing the same thing now. And what it ultimately is a reflection of investors significantly shifting their money and reassessing the global risk in the market. When we look at the market right now, we can see that the S&P 500 is still pretty close to all-time highs, which is great. And when we look at it in a closer sense, we can see that, yes, we do have a handful of key resistance levels overhead with SPY, like at 645, 646, in that 646.45 area. These are all key resistance points to keep in mind, especially over these next few days, and we're going to talk about that in just a second. And then, of course, to the downside, we do have some meaningful supports at 641.50, 640.50, 639, in that 637.30 area. SPY was pretty choppy today. It didn't really move too much in either direction. And really what a lot of traders are waiting on now is what's going to happen at the jobs report on Friday. This is going to be the biggest event of the week, and the main reason for that is because it's going to have a huge role into determining whether the Federal Reserve will lower interest rates for the first time this year at their meeting exactly 2 weeks from now. Basically, we can see that right now there is a 95.4% chance that we are going to see an interest rate cut at this next meeting on September 17th, which is good in some ways, but not so good in other ways. Basically, we could see today, we got data showing that there are now more Americans out of work than there are even jobs open. And this is the first time this has happened since April 2021. So the Federal Reserve is kind of in a sticky situation right now where, yes, they want to cut interest rates because they want to stimulate the economy a bit more and they want to stop some of the damage. But just like we saw with this gold situation where everyone's kind of getting really scared of the US dollar and kind of rushing to buy gold in a very quick and urgent way, basically if the Federal Reserve cuts interest rates too much, that can risk an even worse inflation problem, therefore hurting the US's economic situation even more. So all of this makes for a very good reason to look at gold. Like we have covered quite a bit this video, but like we've been screaming so much over these past few weeks. And I want to say, again, huge congratulations to everyone who crushed it with the recent gold big money trade and just caught gold in general. I know there's a lot of people very happy right now, so shout out to everyone who caught this. And when we look at gold going forward, there's no telling when this trend will end. Of course, you can look at gold or silver or any other hot asset right now in multiple different ways. You can look at it in a day-to-day sense where, you ride the short-term trends, or you can look to play it in a much broader sense and, try to capitalize off of this wave of, buying that we are seeing from traders, investors, and central banks around the world. Whichever method you choose, it's important to, one, be clear on that so you can set your trade up in a smart way. When you have a big move like this, it tends to feed off itself because as it goes up, more people talk about it, more people buy it, more people become aware of the risks that even started this move in the first place, and it causes even more people to buy in, let alone other reasons. There's no telling exactly when this trend will end, but the best thing I can say is know how long you plan on holding, and if it starts to pull back, you can always exit quickly and then re-enter when the uptrend resumes. I will say when we look at GLD, which is the most popular ETF to look at for GLD, 330 is the next major resistance level overhead, but this thing is just cruising past all-time highs right now, so even that isn't like that huge of a resistance level. We can see there is a little bit more resistance around like 329.50 as well, so keep that in mind, and there's also a fair bit of support around 326 from the high of yesterday, so definitely keep these levels in mind. But I definitely want to talk about what's going on with Google as well, because it is kind of single-handedly lifting the market higher right now as it popped up by over 9% today. Basically, Google was facing an antitrust suit, you can say, antitrust charges over its search business, and basically a federal judge just ruled that it doesn't have to sell its Google Chrome browser, which is very nice, and it's a huge win for Google. And also this ruling is going to allow Google to continue paying other companies to place and preload Chrome on new devices. Basically, this is extremely good news for Google, and the stock is just crushing it right now. It's at all-time highs, it's up by 9%, and that not only helps lift the market higher, but it also helps companies like Apple. Basically, Google pays them billions of dollars a year to make Google the preferred default search engine on their products, and this is having a big impact not only on the market, but especially on Google stock. So I definitely wanted to cover this to keep everyone informed. When we look at Google, especially when it's running off of big news, it definitely has a lot of momentum. So for all of our short-term traders out there, definitely make sure to keep this on the radar. And even for our longer term investors out there, be aware of this news as well, because this is something that a lot of investors have feared quite a bit over the past few years, especially. And now that, this ruling specifically is behind us, it definitely does make it, easier for Google to move, because, it's not a lingering fear that is in everyone's head. So again, not as big as gold, but I definitely wanted to cover it to keep everyone informed. Also, looking at the earnings lineup for tomorrow, we can see that we have Broadcom and Lululemon after close, so definitely keep that in mind. Broadcom is one of the top 10 heaviest weighted stocks in the S&P 500, so definitely look out for that. But besides that, let's jump right into some fun stuff, which are some setups and predictions. A stock that is definitely on my radar is RGTI, and it is to the downside. I'm looking at this one for a potential move lower. I know I mentioned this one a handful of times over the past few weeks, and it's definitely still on my bearish radar. It's one of those hyped up quantum names that, is naturally a, speculative stock, and we've been seeing more and more weakness come into this one over the past couple of months. There's especially been a lot of resistance between that $17 to $18 area, and even when we look at just the market as a whole, we are seeing a little bit more of a transition into risk off mode, and basically the market is less euphoric now than it was for most of this year. And we're actually starting to see some of the most euphoric and strongest moving stocks like Nvidia and others start to see some profit taking. And I think that the most speculative names like RGTI in the quantum space are the weakest and most vulnerable to a market pullback. It's definitely on my radar for a potential drop, and I would love to see this one put constant pressure not only on its recent lows, but especially if it can break through this like $14.70 area. RGTI is one of those stocks that is no stranger to big, strong, momentum-driven moves, and they certainly do feed off themselves. Not only can we see that from like a 15-minute chart, but especially from over like the past few years. It's a very crazy stock, and I think it offers good asymmetric risk-reward potential playing it to the downside. Again, it would be great to see a break below 1470, but realistically, if we see any meaningful pressure on its lows, it's definitely going to be on my bearish radar. Another ticker that is definitely close on watch is SoFi. We've mentioned this one quite a bit. It fell a little bit today, and basically there was a recent $4 million big money put trade on this one for the 26 strike puts that expire on December 19th of 2025. I really like how SoFi has been rejecting off of that like $26.50 to $27 area, and similar to the RGTI setup, I think we're seeing more of a transition into risk off mode in the market, and some of these stocks that are overextended and are already falling, in my opinion, are the weakest links and offer great downside opportunities. Plus, a $4 million in the money put trade is never a bad thing to have on your side as well. It's definitely on my bearish radar, and in a perfect world, I would love to see this stock break below that $24.20 area, and the more pressure it puts on its recent lows, the better the opportunity will become, as the more it falls and the quicker it falls, the more other people will get tempted to sell out, the more, you could say, the better positioned short sellers will be in, and for all of the leveraged longs out there, they will definitely get squeezed quite a bit. SoFi is definitely on my bearish radar. Of course, Tom isn't with us today, so we don't have his plays, but let's jump right into today's momentum plays. And with the first one, we are looking at OSCR, Oscar Health, and it is to the upside, and the level to break is 1785. With the next one, we have Las Vegas Sands, ticker symbol LVS. This one's to the downside with the level to break at 55.20. And then with the last one, we have Rocket Lab, ticker symbol RKLB, also to the downside with the level to break at $43.50. These 3 stocks are on the radar for potential continuations if and only if they break through the levels listed. With these stocks, they are strong moving stocks that certainly have a lot of momentum, but as always, remember that how you trade is much more important than what you trade. Setups will come and go. Make sure to protect yourself. Above all else, have stop losses, know why you are trading what you're trading, and definitely check out that Key Lessons channel in the StockedUp Discord. It's completely free, and there's a bunch of great information in there, not only for smart, sustainable, long-term oriented trading habits, but much more as well. So definitely check it out. And besides that, let's jump right into today's $10.2 million big money trade. And we are looking at ticker symbol PDD. So today, the trader here put, again, $10 million, which is quite a bit, into the 121 strike call options that expire in exactly 30 days from now on October 3rd of 2025. Looking at this setup here, PDD is a Chinese online retail company. They also own Temu. The stock has done pretty well over the past few months or so, especially since June. It has been more flat in a broader sense. We can see today it popped up by 2% and was basically strong all day long. It's really hard to critique that price action. These call options are already in the money, and they're also like a short, I don't want to say like a super short-term expiration because it has 30 days of time to it, but that is pretty short for a big money trade, especially when you put $10 million into it. I really do like the risk reward here. PDD and Chinese stocks in general are very crazy for multiple different reasons, but when they do move and when they do have momentum, they move up in a way that is crazier than almost any other group of stocks out there. We can see that there was a giant run around this time last year. We can see Alibaba, another very popular Chinese stock, went from around like $85 a share up to $117. And then for its second leg back in the beginning of 2025, we can see Alibaba went from like $80 up to about $150. PDD's moves weren't as pronounced, but they definitely were sizable. And again, PDD is definitely getting a good uptick in momentum already. So definitely keep it on the radar, and it'll definitely be an exciting one to watch. I do like it how these options are already in the money. But before we continue on, if you are new to the channel, definitely consider obliterating that subscribe button. We post brand new videos every single day covering the most important information, news, earnings events, and basically everything you need to know about the stock market in around 20 to 25 minutes or less. Sometimes we go a little bit longer than that, sometimes a little bit shorter. Today's video is a little bit shorter given that Tom wasn't with us. But again, when you subscribe, you'll get our videos recommended to you more often, and we cover everything you have to know, so definitely consider doing that. And let's also give a giant shout out to today's member of the day, Lavanya, in the StockedUp trading floor, who crushed it with some gold and silver call options. Huge shout out to you. It's great to see gains like this, just about $3,500 worth, which is very nice. So huge shout out to you. Keep on rolling. And if you guys are into short-term trading, definitely check out that first link in the description and the comments down below to save quite a bit. Access our army of custom trading bots, chat with Tom and myself all day long, access big money trades every single day before we cover them in these nightly videos, see which big money trades are actively performing the best, and so much more. It's a place to be if you're into short-term trading, so definitely check it out. But as we cover in today's video, we are set for a very exciting stock market, not only in a shorter term sense, but honestly throughout the rest of this year. So thank you all so much for watching, and let's crush it in the market tomorrow.